760. And this market is in a fresh expansion phase. Just simple strategy. Next time the market gives you a dip or consolidation, I think you go to buy it, because you're not getting this market again at 10,500. Basant made this point. The biggest risk in this market now is waiting. For all you know, this is a market which perhaps is going to have a bit of a melt up, is going to be unhealthy by the time the election result is out. Perhaps the market prices in the moon. But if you're a trader, you have to participate. If you're an investor and you were buying those dips and that bear market, anyway you're getting rewarded. If you're a trader, you participated there, you have to participate on the way up this time.
Oh, absolutely. It's just been one heady ride. There's no taking away from that. We have Abhimanyu Sofat of IIFL joining in on this leg of the show. Abhimanyu, what a phenomenal month, right? 7% up and counting. And I completely take Anuja's point that there's no point right now sort of crying and cribbing and thinking about lower levels, because that time came and went. In terms of stock ideas, let's start with the one or two names that you think can still be bought, because prices have run up. Even NBFCs, I mean, Bajaj Finance is back at 3,000. So now what?
So absolutely, I think so, especially from a BFSI space perspective, I think so. Look at the way Bank Nifty has moved up, and clearly, I think so. Two stocks. I know it's more of a consensus, but ICICI and Axis, clearly the way they have done well over past couple of months, and considering that overall for the banking sector, earnings could grow at close to 50% this year because of lower slippages by PSU banks. I think so going forward, this move will continue, and a lot of the laggards will now probably come and participate. So from our standpoint, from a risk-reward perspective, I think so SBI still looks quite an attractive buy, in addition to ICICI and Axis Bank, which have been doing well, and going forward also are expected to do pretty well. In terms of NBFCs, I think so clearly the microfinance space is something that looks quite interesting to us. There, I think so companies like Equitas, Ujjivan, they will come with pretty decent kind of numbers going forward. So that particular segment of the NBFC space also looks very exciting to us. So overall, I think so financials is the theme to be in from this year perspective.
Okay, just look at some more names. By the way, Arvind has moved to the high point of the day. There's move happening in Federal Bank. That's also interesting. By the way, Federal is the other one which has underperformed in this current move. So who knows? Apart from that, you have a couple of others. Union Bank. In fact, the entire PSU pack, fresh move happening on that. Bank of Baroda as well, back to the high point of the day. Balkrishna Industries. So a lot of these stocks moving up at this point in time. There are a couple of stocks on the way down, though. Tata Steel, for example, that's moving a bit lower. In fact, the entire metals pack. But Tata Steel would be an interesting stock. Just see the stock right now, 2% lower on that stock. Apart from that, Hindalco as well, moving to the low point. So there are a couple of stocks where there is some selling pressure as well. But let's get you some thoughts from Arvind Sangar of Geosphere, who spoke about the probability, in fact, a very high probability of another 10 to 20% move in Indian market.
U.S. bonds have in the past given a false signal about a recession. Obviously, an inverted yield curve is usually a precursor to a recession. So I think right now is assuming, and in my opinion correctly, that we are seeing global growth slow down, but we are not on the verge of teetering into a recession. To me, the Goldilocks for India would be no recession in U.S. or Europe, easing of liquidity conditions by central bankers, both in Europe and the U.S. And India's growth by comparison looks even better compared to much lower growth in the West. So that would be the bull case. The risk is that if the West is going into a recession, and we're 3 or 6 months away from that, then that's a headwind that the Indian market has never really outperformed on a sustained basis.
Okay. In that case, what's the bull case scenario for the Nifty? 14,000? And what would be the bear case bottom?
Well, I think, the bull case, clearly you can go up 20% from here over the next 12 months. And that, presupposes certain things happening in India, right? So it's not just about global factors, but it's about Indian elections producing a relatively, relatively stable outcome, seeing continued, economic strength. In fact, a recovery from some of the weakness that we've seen in some of the fundamentals that have been, that have been somewhat disappointing in terms of, auto sales, commercial vehicle sales, and other economic measures which have looked weak. The assumption is that that'll recover, and all of those can give us an upside of 20 to 25% in the Indian market if the economic outlook in FY20 delivers, reasonably good growth. We wouldn't look for fantastic growth, but 10 to 15% growth would give us that kind of outcome. Our central case is, very modest slowdown, but not a recession in the West, in which case we're more inclined to buy into weakness rather than be selling strength.
Okay. Arvind, of course, the next trigger for us is next week's monetary policy on next Friday. You reckon we are in for a rate cut cycling back in India?
Absolutely. I think given current Indian, inflation numbers and given global easing of financial conditions, India clearly has one of the higher real rates in the world right now, and it gives the RBI a lot of room for continued easing. I think it's very likely. The only question in my mind is it going to be 25 or 50 basis points? I think the real story we have to see is the financial condition tightness that India has seen with the NBFCs, some of them, having seen the cost of borrowing going up as well as their availability of liquidity shrinking. Rate cuts will help, but I think we need more. Rate cuts are not a panacea, but they certainly are a helpful factor in helping the growth get back on track.
I wanted your thoughts on how to approach the banks now. What is going so damn right for the sector? And is it too late to jump in for retail investors?
Well, the banking space has benefited from the perfect storm, right? If you're a private sector bank, you've seen your major competitors, the NBFCs, get severely hampered, and therefore that's providing opportunity for banks to grow without having to take too much risk, just customers, looking for options. I was talking to a housing company, and they were talking about some of the customers relying on one of the housing finance companies that was run into trouble, and they were easily able to replace them with one of the major private sector entities. So that's clearly benefiting the banks, and plus you have easing interest rates, and you have the public sector banks, which still remain extremely constrained because of capital and because of balance sheets. So therefore, I think this is kind of which had lagged for a long period because of the bad loan problems, and that's behind us. So I still think there's room in these, but we're actually finding some of the NBFCs that have been extremely badly hurt to be a little bit more interesting. Those NBFCs had gotten very expensive, and we had traded off all of them last year, but some of them have come back to levels where I think that some of them are now trading at discounts to some of these banks. And yes, their growth will not be quite as heavy as before, but that is another area where investors should look at some of the higher quality NBFCs that have gotten sold off.